Hello everybody. Welcome to the webcast where Kempower presents its financial results for the first half of the year 2022. My name is Paula Savonen. I am the Communications Director for Kempower and your host today. We will first have the presentation in English, and during the presentation you can ask questions anytime in the chat box or the Q&A box on your screen. Please ask a lot of questions. We want to hear from you. We have 4 Kempower management team members presenting Kempower's results and strategy today. First, Tomi Ristimäki, our CEO. Jussi Vanhamenen, Chief Market Officer. Tommi Liuska, Chief Sales Officer, and then Jukka Kainulainen, Chief Financial Officer. Please join us, ask a lot of questions, and now I welcome Tomi.
Hello my side as well. So I welcome you to this event where the theme of the day, as you saw from our announcement, is growth. And then we will come back to the financial growth as well, but let's look at the growth in a little bit different kind of numbers. So we are looking at how much electricity we have delivered from our chargers from the beginning of our production in 2019. So we are really talking about 30 million kilowatt hours, which equals 10,000 UK homes electricity per year. And looking at converting that number into driven kilometers with electric vehicles, if we talk about climate change, if we talk about transition to electrical transportation, we have contributed 154 million kilometers driven, and talk about 1.6 million charging sessions. And also, as we see a little bit looking at the comparisons on the let's say last year, the growth is up in those figures as well. But if we go to the main point of today, I think we can say that the quarterly performance was really strong for Kempower, and that's really up to our great team to achieve that. And then we also updated the growth strategy regarding USA to be on the market before the end of 2023. And looking at customer base, well, what's really a highlight that we are growing in the existing customer base and also gaining a lot of new customers in new regions. And on when we're looking at when we made our IPO in the December 21, we talk about a lot about our future capacity. So all production lines are open in our new factory in Lahti. And how we see a little bit, let's say, the highest risk from the market. The component shortage, of course, is affecting to us like the electronics industry, and we see that actually going even more severe risk in the future that the component shortage is creating for the whole industry. So looking at order backlog in the end of Q2, we had really 62.4 million order backlog, which means about more than 3 times last year's revenues, which looks a really good performance from sales point of view, and we are still looking 3-digit growth, 225% growth in revenue in Q2. Looking at Q2 in 21.6 million, on top of the Q1 11 million, reaching the first half to be 33 million euros. Looking at the whole last year, 27.4, so we are going up. And keeping up, it also profitable in a way that gross margin, we are keeping it at our target levels. And of course, we also communicate that one of the risks of the company is, do we get employees or do we not get employees? And looking at doubling the headcount almost in the first half of the year is a good achievement from that point of view as well. So we are looking at the growth strategy execution during Q2. We have now 8 subsidiaries in Norway, Sweden, UK, Germany, Netherlands, France, Italy, and Spain. And we are speeding up the entry to the US market. Before we had a target to go before end of 2025, but we see the market, let's say, growth in US coming a little bit faster, so we changed the target to the end of next year. And on top of that, on US, like we said, that we are already operating in there with sales with selected partners. So we were able to announce 2 new customerships there, Chef Energy and Greencore. Greencore in that market. Also very remarkable was one of the leading charge point operators in the whole Europe, in Norway, that we have now customer contracts with Mer. And Sverok and Volvo Trucks, that's an interesting point, but it's also showing that we always want to highlight that we see a lot of potential in the truck market in the future, and how we see that the trucks are coming to the market. And in the Sverok case, where you have concrete trucks moving to electric, almost as the first cases in the world, this is a big highlight for the whole EV industry. And when we are looking at the capacity expansion, and assembly lines are running up, we have now the whole office actually has moved after the Q2 end, so we have all the operations. We have office, we have R&D laboratories, everything is working in our new facility already. 124 people recruited in the first half of this year, and continuing that place. So if you have a potential employees on the line, please sign up. And product launch highlights, I think it's also big thing that we still see the truck charging as one of the key things in the future, and that's why we have come out with the liquid cooling satellite actually to increase the power. And also how we see the personal cars change happening up, that the voltages of the cars is rising up, so we are also answering to that with our adaptive voltage charging. And looking at sustainability, we wanted to also highlight here that what we are doing in this market, in a way that what is EV charging contributing to the climate change and sustainability. So we are mobility emissions that the electric vehicle charging is enabling is changing the mobility emissions down by 86% in traffic, based on the Finnish research data. And now Kempower is also applying for green equity from Nasdaq. And as looking at the personnel is really in key position to us also from the sustainability aspect. This is really one key point. We are keeping the employee net promoter score very high still, it's 80 number. But now I think you are really interested about what's our market and what we are doing, so I will give the stage to Jussi Vanhanen, our CMO, to tell you about a little bit what we are doing in markets and products and the entry to there.
Thank you, Tomi. I was thinking that let's look at the EV market a little bit, and this picture and analysis now from the Europe, and it's showing and explaining that why we are in the countries where Tomi said that we are active at the moment. On the left-hand side, you see the new car registrations, the EV registrations in Europe, and the leading countries there are the typical Norway, Iceland, Switzerland and so on. It's showing that how advanced the market is in the EV. On the right hand side, you actually see that how much there's the quantity of new registrations. And in this picture, I highlighted with our logo the countries where we are active that Tomi actually mentioned. And then the green ball is highlighting also how we have been and where the marketing has been active in the countries. There we are targeting the digital channels, digital activities, but also the live events now from the post-COVID season that we have participated on the main events in Europe. And this actually shows and highlights quite well that we are present where the EV business is in Europe. So the strategy works and we are ready there to serve our customers with our sales. Still, this is the traditional picture that you have been seeing a couple of times, but our main market segments still are the private vehicles, commercial vehicles and off-highway. In private vehicles, the main customer groups are the charge point operators, but the retail chains. Very strong market for us now and in the future. In commercial vehicles, the bus and truck operators, logistics centers, it's a growing segment. OEM customer group, mining, but also the truck manufacturers and other original equipment manufacturers, very fast growing market and strong collaboration in that segment. And rest of the customers we are handling with our distributor and channel partner network, and keeping our direct focus on the main customers and key accounts. A little bit looking how our strategy is aligned with the product development, and highlighting and looking recent product releases, H1. For the CPO market and for the retail chains, we launched a version from the ChargEye SaaS system called ChargEye for CPOs, giving a premium customer experience for the EV drivers. Second big launch for the CPO segment was adaptive voltage that Tommi was also highlighting in the starting section. And the adaptive voltage, it's a dynamically optimizing the power electronics for the different cars that are coming with the 800 volt batteries or 500 volt batteries. It's an amazing feature, taking all the potential from our chargers into the use. Couple highlights from the bus and truck segment, the product releases there. Earlier this year we launched the ChargEye for the depots, that is bringing the optimization for the depot sites, and roughly bringing a 30% operational savings for the customers in that segment. The second significant product launch was a liquid-cooled satellite system. This is giving amazing 400 kilowatt charging power from the one cable. This is the highest number of power in the market at the moment. It's amazing result from the R&D. Third one, highlighting our commitment for the depots, and the bus business is completing our depot offering with the pantograph systems. So now it's a quite complete and comprehensive offering for the bus and truck operators. And now Tommi will explain a little bit more detailed our success and main milestones for these segments. Go ahead, Tommi.
Thank you, Jussi, and good afternoon for everybody from my side. So at Kempower, our sales strategy has been to build up long-lasting, sustainable relationships with so-called blue chips companies, which are well-recognized world-leading companies in their own industry field. And below we can see listing of these kind of companies. So CPO and retail chain business, this is the most fastest growing segment for us, and we are expanding quite fast outside the Nordics. And then bus and truck operators have been traditionally a very strong business area in Nordics, but now we have managed to gain customer trust also in other countries in Europe. An OEM segment is a versatile segment having several different kind of manufacturers, typically vehicle manufacturers, and there we do close cooperation with world-leading companies. And distributor and installer network, this is the area where we keep on expanding. Very important for us so that we can reach geographical reach faster, and in order to able to offer for our customers turnkey solutions, including also installation and civil works. And then some highlights from the customer relationships. So PowerDot is one of the European leading charge point operators, and we have a established relationship with them, and got the first order for a charger rollout, which covers Portugal, Spain, Poland, and France. And the first order value was 3 million euros. Then about the North American business, so we are already active there and have some customers that we are serving from Finland, and deliveries happen from there. So few examples are Greencore, which is a charge point operator active in US and establishing several locations with fast chargers there. And then another one is Jeff Energy, based in Minnesota, east coast of US, and have been active in their own field in charge point business already from 2014, and now we have started cooperation with them. And then, like I mentioned, this fast charging business is expanding outside of Nordics now, and one example is Luxembourg, where we are cooperating with our sales channel partner Minusines and implementing fast charging system consisting of our Kempower C-Series power units and then C-Series, S-Series satellites and ChargeEye back-end software, which adds the customer value. Then our sales organization structure is as follows. So we have 5 different sales regions, and we have local sales resources in all of these regions. And in addition to that, for the international large customers, we have a established global key account team, and we have dedicated global key account managers for helping the business and serving customers as well as possible. Thank you. And now I hand over to Jukka, our CFO, to go through the financial figures.
Yeah, thank you, Tommi. Okay, so this was and is our first financial report according to IFRS. And the reasons why we moved to IFRS, there is basically 2. First of all, we want to have our financials more comparable with other companies in the industry and also globally. And also, of course, we want to increase the interest of Kempower as an investment. There's 3 areas where the IFRS impacts most on our numbers. First one is the lease contracts, which are basically capitalized on our balance sheet, which will basically also expand our balance sheet quite a lot. That will come more in details on the following slide. Also, the development expenses side, we are also capitalizing the development expenses if certain criteria are met, and then of course we will book the depreciation according the economical value of that. And the third reason it's more for the comparable numbers is this last year IPO costs, which are treated different way in IFRS. So in Finnish accounting standards, we had the IPO cost in financing expenses, and now in IFRS, those are split between operating expenses and the equity. Then our key figures for the quarter and also H1, and this is of course now according IFRS. So like Tommi mentioned, we had really strong growth. So our order intake 82 million euros in H1, 55 million in quarter 2. So this is of course highlighting quite well the high demand which is in our industry at the moment, but of course the great work done by all our employees. Our gross margin in quarter 2 was 45%, which is up from 42% quarter 2 last year. But then when looking our EBIT and profitability, even though we have expanded our operations, we have invested a lot on our growth, we have increased our headcount, we still made a positive operative EBIT in quarter 2 and in H1. So 8% operative EBIT margin in quarter 2, 3% when rounding up in H1. And even on top of that, we actually did the positive result for the period in Q2. Few topics also relates on the IFRS. Like I mentioned, the lease contracts impacting on our balance sheet. So our balance sheet has increased 15.4 million euros due to transition to IFRS and relating to lease contract, like I mentioned. Then a little bit more details about our revenue trend, revenue progression. So we made this 33.2 million euros revenue in H1, which is more than our whole last year revenue, 27.4. At the same time, our Q2 revenue, close to 22 million, was almost double than our Q1 revenue. So it's a great result, like Tomi mentioned earlier. Also, it's really important when looking our growth strategy. We have had the target to expand outside Nordics in rest of the Europe, and revenue in the rest of the Europe grew by 1,264% in Q2. And at the same time, rest of the Europe is already 39% of our revenue in Q2. Then let's look how our organization have grown. So we have 260 people at the company end of June this year, and actually our headcount grew in first 6 months more than whole last year. And also we almost doubled the headcount comparing the end of the last year. When looking how the headcount is split between different functions, operations is the biggest unit at the moment, but when we grow, we of course have to strengthen all the units. So we have to grow in all the units in order to continue growing. Then a little bit more about order intake and order backlog. So like I said, almost 82 million euros order intake in H1 this year. It's a really great result. It's more than double than whole last year order intake. And out of this 82 million, when rounding up, 55 million was booked in Q2. So really strong Q2, like I mentioned. Also, like Tomi mentioned, we have strong order backlog due to that now 62.4 million at the end of the Q2. Then going to gross margin, our Q2 gross margin was 45%, which was improvement from the Q2 last year. It has gone down from the previous years, but we have to remember that our volumes has also grown quite a lot. So the previous year's numbers are not fully comparable in that sense. We also get, of course, questions about the cost inflation. Yes, it's also impacting on us. We have some unit cost increases, but we are able to mitigate those by price increases, and thanks to our growth, we get also economies of scale, which is helping to reduce the unit cost in some of the components. Then regarding operating cash flow, we had 1.6 million negative operating cash flow in Q2, 3.7 million negative cash flow in H1, and this is of course relating on our growth. So our growth, it's employing the capital when looking the inventory levels, when looking the accounts receivables and payment terms, but it's also positive thing. So we are not aiming to minimize our inventory. We actually have to build the buffer stock. So we have also issues with the components availability, and that's why we built the buffer stock, and it's visible in our inventory levels as well. Then at the end, our financial targets unchanged. So we still target the 200 million euros revenue in between 2025 to 2027, and also 10% operative EBIT on the midterm as well, and the 15% in the long term. But short-term outlook we refined in our report. So like you see, we still see the favorable market environment and also positive demand on our products, but we don't see anymore the seasonality impacting our numbers in Q4 and Q1 that much. So we don't see material impact regarding the seasonality. But we still continue growing in Europe, expanding in Europe, and like we have communicated, we are now going to USA and establishing the operations in the North America. Thank you. And then it's time for questions and answers.
Thank you, Jukka. Thank you, Tomi, Jussi and Tommi, and thanks for everybody on the line because we have plenty of questions. You can keep them coming and we'll see if we have time to answer or if we answer them later on. Now to the questions, and the first question or questions relate to the order book. And first of all, there's a question about delivery times of our products. How long is the delivery time at the moment?
That varies a lot, of course, depending on which product and what combination and when the order comes in and what's the... But of course we see in this situation when we have sometimes component shortages that our delivery times have been getting longer, as with everybody, but we see ourselves actually to be on the top of the market still in delivery times in EV charging equipment. So that's positive, but it's also not so nice to sometimes say to customers that maybe you have to wait a bit.
Yeah. Then we continue with the delivery times, and this goes to Tomi, maybe to you, Jukka, also. How long does it take your order book to translate in revenue?
Yeah, this is something we have answered also earlier. So it depends on the customer, but it's between 1 quarter to 3, depending on the customer and on the contract as well.
Yeah. Have you witnessed any issues with deliveries due to the high order book growth? What are the average lead times? Are they longer than peers? Some have a little or no backlog because of customer times.
So I think I already kind of answered that today we see actually that we can still win a lot of orders, that we are faster than average, so faster than main competitors in the market. But as we see the market that there is a high demand and then also the component shortage is affecting. So there is something also we have had some longer delivery times also communicated to the customers in short-term period.
Thanks, Tomi. Then let's move to capacity topic next. Utilization rate of your current production capacity, is the capacity limits a threat in the next, let's say, 2 to 3 years? And where are you looking to invest going forward? But let's take the capacity first.
I think the capacity, what we see today, that it's a continuous improvement, that we have taken the facility. Of course, we have all production lines which was planned in the first phase are operational. There is still room to expand. There is a process ongoing for automation, for making the production more efficient. So it's a continuous process, and that's actually something what we do every day. That we are looking at new ways how to increase the capacity. So and our way of manufacturing is not building some fixed manufacturing lines. It's a kind of like a tool. You have a table and a person and you multiply the certain ways in the production. It's pretty fast to do as well if we are looking at this kind of cell manufacturing instead of actual production lines. Yeah.
Then where are you looking to invest when going forward?
So yeah, we of course continue investing according to our business plan, what we communicated earlier last autumn in our IPO. So we continue expanding our production capacity if there's customer demand, if customer demand is growing. So that's really important. And of course, this USA is also now coming earlier than expected.
Yes. Then we go to questions regarding Europe. Olavi Kaskisaari from Kauppalehti asks, how is your operative EBIT distributed geographically?
So we don't measure it that way. That's of course our internal accounting. So we measure it on the group level, and internally we also steer our businesses globally and based on different regions, like Tomi mentioned about on his organization.
Yeah, and then Olavi Kaskisaari continues. Is it possible to reach a 10% margin immediately when entering a new market?
Of course, everything is possible, but we are not like in our financial targets, so we target the 10% on the midterm. So that's my answer on that.
I would say in sales margin, well above that, but then of course the operations, especially when we're looking at the US expansion, we have already communicated that there will be also manufacturing things. So of course that takes time to in the beginning you have certain investments cost more and then ramp up the things. And
Yeah. And I think this goes to Tommi. It's about our European expansion. Your European expansion seems to progress very fast, referring to the revenue share and your updated outlook. Could you remind us of your key markets in Europe?
Well, key markets traditionally it has been Nordics, but I would say like big countries like German-speaking Europe, France, UK. They are the, let's say, priority markets, but overall Europe as a whole looks very, very, very promising.
What about the customer segments? Are they the same in, for example, in Germany and the UK as in the Nordics?
Pretty much, I would say like that. So in Europe, all these segments are interesting for us and growing as well. And maybe let's say North America, if we talk about that, then the public transportation is not that much used and not so big segment. So there is natural that the focus will be more on car charging and public charging.
Then Lauri Suoninen from Carnegie asks, how do you see the market growth for DC chargers in the coming years? And secondly, how are the European clients reacting to very high electricity prices? I think there are two questions here. So we take first the how do you see the market growth for DC chargers in the coming years? And maybe we take that with Jussi.
Okay, thank you. So if you look at the market studies from the driver's point of view and everywhere, that one thing is clear that that is limiting the growth of EV is a lack of infrastructure. So it's a big mega trend that the demand is there and it will increase. Now we see that the change will accelerate faster and faster. So the demand at the moment is good, but it will be better, even better in the future. That's how we predict. The second part of the question was the electricity price.
Yeah.
And some of us we buy also the electricity from the stock market, like Tommi, and we speculate about it all the time. But I think there is also kind of like 2 points there, that this transition to the EV, it's so massive mega trend that this pricing change in electricity, it doesn't slow it down. It will continue and accelerate. Second thing is that if we look at the driving cost with the traditional combustion engines to the EV, still even that the electricity prices are a little bit higher now, that it's still much more efficient than the combustion engine. So I think these two, that it will not slow down the market. Of course, it's really annoying for the EV drivers like we are, but we will survive.
We will survive.
And I think the price increase in fuel is even so much higher that
it is true that the petroleum prices, they are also high. That's what we discussed.
Yeah. Then we will have two follow-up questions. Follow up on the order book topic. Was the Q2 order intake exceptionally high? If the run rate of 55 million euros per quarter continues, you will reach 200 million euros in sales already in 2023.
Well, it's a good question, and we don't say it's exceptionally high, but like we said, it was really good and great quarter. But this is now the questions of which financial forecast, which we are not going to give. We still stick on our financial targets, like I said, 200 million euros in 25 or latest 27.
And giving looking at why to change our also promise to the market on our, we look at this a little bit uncertain times, and we are looking at component shortage, but we are also looking at the political situation in Europe affecting the things and energy things, and there is many things which are uncertain at the moment. So when there is need and certainty, we will then look at it again. But that's basically the situation today, that we keep it as it is.
Thank you, Tomi. Then we also have a follow-up question on capacity utilization. What was your capacity utilization percentage in Q2 2022?
With the continuously improving production, this is a hard figure to actually measure. But let's say there's a lot of the floor space is used, but it's improved the usage of the capacity. So this would be a little bit easier to say if you would be manufacturing cars in a production line, when we have basically production which is in let's say the efficiency is increasing all the time when we are investing, let's say, like I said, automation. We are looking at the more efficient use of goods, and we are expanding internally the production, let's say, methods in there. So I cannot say in that way what's the percentage, but let's say that there is improvement what we can do in current facilities.
Yes. Then Kempower has just appointed a new Chief Service Business Officer. Will the service business be a separate business segment for Kempower, and what are the targets for the service business?
Today, how we see that the market is expanding, and we're very much in the beginning DC charging business as well. When we are looking at service is an interesting business in long term, and we will see if we need to report that separately when it becomes really interesting. Today, the service business is supporting the product sales and supporting our customers, securing us the orders in production, and that's when we are growing the company so fast with new orders. This is so much more significant. So we cannot promise, but maybe in the future it makes sense when the time is right. But today we see the service business as more or less part of our offering as a complete. But obviously the main income is coming from the products.
Thanks. And then to the market dynamics. Can you remind us of your competitive dynamics in markets where you are currently active? Any major changes since the IPO? Who are the main competitors, for example, in the Nordics? And I think this would be interesting to hear from Tommi or Jussi.
Well, I don't see any big changes during this time frame. So there is, let's say, handful of main competitors, and each and every one of them have their own benefits and also disadvantages, and
I could continue that little bit. That even that, of course, there is no competitors, but the market is growing so fast. So this is somehow the charger manufacturers that we are making the market together, and there's so much work for everybody. That I think that's one approach, that competition is there, and it's a healthy feature always in a growth business, but still, like it's so big growth that the cake will be baked in a few years.
And I think if they were wanting to hear names, then we have the usual ABB, Alpitronic, Tritium, actually Europe-wide, that are there in the market. Maybe we concentrate on Nordics. I've been seeing Alpitronic and Tritium much more than the other competitors today.
Thank you. Then we go to North America. You mentioned different alternatives and accelerated entry to go to North America, including a partnership. Could you please elaborate in more detail, for example, what other alternatives you have identified? Also, when do you plan to conclude upon which alternative to choose? Will you at some point build your own capacity in the market? So in general, this question is about the entry to the North American market.
Well, we already communicated there will be some level of assembly done in US, and that's actually a requirement of the market, that there is a heavy subsidies in the market, but it's also related to how big part of your product is manufactured in US. So that's for sure. On the options, there is all the options in the world if you look at different things, and we will communicate that when we have made decisions, so not before that.
Yes. There is also a question about the mergers and acquisitions. You did not comment upon the mergers and acquisitions scenery in your business. Any thoughts?
Well, of course, there is thoughts. We plan to grow organically, like we have done so far, but we don't exclude the M&A either. So if there is interesting targets which makes our offering and company better, so why not? But we focus on organic growth at the moment.
Yes. This goes to Jussi.
All right.
About the products.
Yep.
Have you done an analysis of your product versus peers? Where are you stronger or weaker? And then again, who are the most relevant competitors? But I think the interesting point in this question is the analysis of our product versus peers and the strengths or weaknesses of our products.
Of course, this is the key in the marketing, to analyze that where we are and what's our target position with our product also. And I think where we are very strong against our competitor is the user experience. The EV drivers, they love us, and it's amazing the feedback what we hear from all the events and from all the drivers that we are seeing. And like you know that all of the Kempowers, we are EV drivers also, and EV drivers, we are like nowadays like these caravan people, you know, that when we are at the charger, that we chit chat with each other, and that feedback, that moment over there when we talk with the people, it's amazing. So I think that's where we are strongest. The features like the dynamics and that kind of, it relates to bus and truck fleets and so on also, but it's the user experience. The hardware itself, it's very strong, and the ChargeEye, the integrations, they are there, but still if only thing you can remember is to remember the user experience. And I think most of you will agree also.
I agree.
And one point to add is also that we see a lot of the competitors are product centered, and we are kind of solution centered through our system thinking, that we are solving the whole site in once, and not focusing that how do you make one box that can charge one car. We are looking at it in a bigger picture.
Yes, yes. There is a follow-up question on the mergers and acquisitions. What types of M&As are interesting for Kempower? Products, vertical integrations for sales, channels, manufacturing?
So we haven't communicated more about that topic. So I think that's what I answered is actually now enough. So it's if we would be active, we would communicate more later on. But like I said, we focus on organic growth at the moment.
Thank you, Jukka. And this next question goes to Jukka. Also, Jukka, OPEX to sales ratio, will the second half of the year look similar to the first half of 2022?
Like I said, we don't give the forecast on that. What I can say, we continue still investing our people on our production expansion, which means we still allocate quite a lot of OPEX on our business also in H2. So if we don't do that, then we endanger our growth for the coming year. Yeah. So that's really important and critical.
So the focus is on growth,
rather than
the profit yet. So this is the phase of the company where we are taking the market. And we are actually today, we are growing a lot faster than the market is growing. Yeah. So important to remember as well.
Exactly.
Yes. Then Jukka, the last question to you, and then I have still one for you, Tomi. Have you considered commissioned research from companies like Inderes, Danske, or others?
That's a good question. What I can say, we will communicate something about it this autumn.
Thank you. And then we have the last question. This goes to Tomi. We have had very strong quarter, and congratulations. Could you please summarize shortly the way forward? Do you see this growth rate to continue, and what are the top 3 risks that worry you the most?
I think the growth rate in percentage is hard to keep up. I think we might see 3-digit growth or not, but it is of course in percentage-wise, when the millions get bigger, it will be more difficult because you are building the actual growth with physical products mainly. Even we have the software sales as well. But I think on today's environment, I would list the component shortage and the possible risks with getting goods and let's say material to the production is number 1. If I look at the growth, people must be highlighted. We are very much, let's say, our growth is based on the amount of people and the quality of the people we have. So finding the good people and finding enough good people, even we have now recruited quite a lot, we have to continue that path all the time. And of course, then in the end, I would say the capacity expansion of the production. And I would also incline to say that it's not so much about our own production, it's also that our supply chain can come together. So that's why we have the dual sourcing strategies. We're expanding our purchasing team, try to have a security in the supply chain is there the key.
Thank you, Tommy, Jukka, Jussi, and thank you for everybody on the line. You have presented plenty of very good questions, and thank you for those. Please follow Kempower in our social media channels, especially in LinkedIn. That's the channel where we update everything that's going on. We will also start our fall tour of exhibitions and events soon. So we also hope to see you at different events around Europe. And we also hope to meet you at the chargers, because all of us are EV drivers. Whenever you meet us at the charger, just give us a shout, and we want to hear from you. Thank you. Bye-bye.
Thank you.
Yeah.
Thank you.